Hello and welcome. You're tuned into Market Fatafat. I'm Ankita Saxena and with me is Ravinder, and in the next half an hour we'll take you through all the stocks that are buzzing in trade either on the back of news flow or on the back of technicals or on the back of earnings. But before that, we'll just quickly take a look at how the market texture looks like at this juncture. Well, we have corrected from the day's highest point right now. Nifty is down 109 points from the day's high, but very flat moves is what we see coming in. 24,350 is the level that Nifty is managing to hold on to. Remember, today's Sensex expiry also, so that could be playing out on the market as well. Nifty Bank is also corrected from the day's highest point, a fall of almost 290 points coming in from the day's high on Nifty Bank as well, but it is still managing to hold on to those 56,000 levels. The broader end of the market, that was the outperformer, has also corrected slight bit. Midcap, though, still holding on the fort. It is still trading with gains of almost 1% in trade, and Nifty small cap is also trading with gains of 0.7%. The broader end of the market is still managing to hold its stead. Well, also the sectors, let's talk about that. We have Nifty Auto that was in the fast lane. In fact, that is still trading with gains of 2.2%. We have Hero Motor, the earnings candidate, that's doing 4.5+% gains coming in. Bharat Forge, Bajaj Auto, M&M, Excite, TVS Motor, Ashok Leyland, all of them trading with gains of more than 2.5% thereabouts. Midcap, like I mentioned, is the pack that is really doing well, especially stocks like Polycab. That's up and away more than 6.5%. Paytm is another name that has come out with its earnings and doing well with gains of 5% on account of the management commentary that also has come out. Hero Motor, like I mentioned, BHEL, Bharat Forge, BSE, all of these names are lending a lot of support to the entire mid-cap basket. We have Nifty Energy also that's doing well with gains of 6.7%. Most of the energy counters are also trading in the green. What's not doing well today is the FMCG pack that's on the back foot. We have HUL, United Spirits, Nestle, ITC that is trading with cuts of 0.5%. Nifty IT also in the red with cuts of 0.4% in the PSU pack, also like Canara Bank, Bank of India, Union Bank, all trading with cuts of 1%. So it's from the banking pack we have the PSU names that are not doing that great. But let's get going with the show and get you the stock-specific action. For that, we have Ashish Kayal, who's the founder and CEO of Wave Strategy Advisors, joining us on the technicals, and Ravinder from our research team joining us. Hi, good afternoon to both of you, and thank you for joining us. Ravinder, the first stock that you've picked out for us is Kansai Nerolac. Tell us, it's an earnings candidate. What does the earning look like?
Well, yes, Kansai Nerolac is in focus after reporting a good set of numbers in Q4 FY26, and in Q4 FY26, company's profitability improved by 3.5% on a yearly basis, which is driven by operating leverage and better product mix, which is led by focus on the profitable business. And on in Q4 FY26, company margin has expanded from 9.1% to 11.1%. And this expansion was driven by better output performance in both industrial and the decorative segment. And if we talk about the volumes of the companies in Q4 FY26, then overall volume grew by high single digit in Q4. And apart from this, auto segment also saw a good double digit growth, while powder coating grew by mid single digit. And on the price hike, the front company has taken a price hike of around low teens starting from the March 2026. And management say in the con call that they may take further price hike going forward based on the current situation. And after that, brokerages had turned positive, where Antique has come out with a note and they have upgraded the stock to buy from hold and hike target price rupees to 302. So back of this, Kansai Nerolac is in focus and the stock is up around 5%.
Moving on from Kansai Nerolac to Hero Motor, that is also doing very well in the trading session. That's up 4% in the trading session. Yesterday it came out with its Q4 results, and today it's got an upgrade from Jefferies. And on the back of that, we do see the stock move up 4%. But Ashish, in the last 1 year also, Hero Motor has done pretty well for itself. Do you see this positive momentum to continue, and what are the levels that you are tracking in for Hero?
See, if you look at Hero Moto, since December onward, the stock has corrected on the downside, but now it has started showing some kind of a positive activity, and we have seen a breakout of a very stiff trend line. It also found support near the 10 and 20 days average, and that suggests that we can expect a move towards 5,800 on the upside, which is a swing high, near-term swing high. And on the downside, one can maintain a stop loss for the stock, which is at 5,200 levels.
All right, so those are the levels to track on Hero Motor, and let's move on then to Shipping Corporation of India that was trading up 10% and signing an MOU with NBCC India for the upgradation and renovation of the Maritime Training Institute in Powai. and an asset that is owned by the Shipping Corporation of India Land and Asset Limited. And on the back of that, it has cooled off all the morning gains though right now, but still managing to hold on to gains of 1.5% thereabouts. But let's move on to the next one, IIFL Capital. Rabinder, tell us what's the news on this one.
Well, yes, IIFL Capital is up around 5% after the company in the filing said that the Fairfax India, which is an investment holding company which is backed by Canada-based Fairfax Financial Holding, will increase its stake in the company to 51% through an investment of rupees 2,000 crore at 350 per share. And Fairfax India will invest through its unit FIH Mauritius investment through a preferential allotment price at 350 per share. Which is a 5.3% premium to IIFL Capital as closing price yesterday, and the transaction will trigger an open offer for IIFL Capital shares in accordance with the Indian market regulation on public shareholding. So back of this, IIFL Capital is in focus and the stock is up around 5%.
All right, that's IIFL Capital in focus. Let's move on. Ashish, Hindustan Copper, tell us on the charts, how does it look like to you?
See, the overall metal space has done well, and Hindustan Copper also, I think, is going to be doing good from here on. The overall stock performance that we can see was consolidation over past many weeks, forming a flat pattern and gave a breakout in today's session. We can expect that pattern target to be around the levels of 610 on the upside, and the support for Hindustan Copper comes to be around 540.
Right, let's move on to the next one. Another from the mid-cap space that is holding the fort is Paytm with gains of 4.8%. Overall positive numbers coming in. Core payment margins continue to improve steadily. The merchant business is strong, supported by healthy device additions. Financial services growth stays robust, primarily driven by the margin lending. Operating leverage also continues to strengthen as fixed costs remain well controlled. Paytm achieves full year profit with PAT of 552 crores in FY26, and the revenue rises 22% at 8,437 crores. They've also gained an UPI consumer market share every single month in FY26 with consumer UPI. Now, as far as Bernstein is concerned, they're maintaining an outperform and they've set the target price at 1,500 rupees. They see that the RBI has cancelled the payments bank license, citing governance and compliance concerns, but development seen as a negative but largely anticipated given the past regulatory actions. It's going to have no impact on the core business as Paytm's operations were already shut and the PPBL operations were already shut and ring-fenced. So no financial hit that is expected in the PPBL. So on the back of that, they are maintaining an outperform on the counter. And on the back of that, Paytm is up and away 4.5%. Rabinder, coming to you, another mid-cap name, Polycab, that is come out with that is doing very well in today's trading session. Stock come out with strong results. Take us through the numbers and what the brokerages are penciling in.
Well, as Polycab is in focus, remember that yesterday during market hours, company reported a very strong set of number in Q4 FY26 as well as for FY26, and today brokerages has come out with the note and brokerages remain positive on Polycab India. Firstly, let's talk about Goldman Sachs, where Goldman Sachs has come out with the note and they have maintained their neutral rating and hiked target price to rupees 8,140 as compared to earlier target price of rupees 7,690. They say that the FMEG growth remained robust, which is aided by the solar product and operating leverage, and EBITDA margin declined due to lower exports and higher institutional sales mix. And GS highlighted the margins remain a key monitorable amid rising supply addition and valuation seen relatively expensive after the recent stock run-up. And Morgan Stanley has also maintained their overweight rating with target price rupees 8,707. So back of the positive brokerage note, Polycab India is in focus and the stock is up more than 6%.
All right, moving on from Polycab to Muthoot Finance. Tell us what are you penciling in, Ashish, for Muthoot Finance? This name has really picked up momentum in the last 1 month. Do you see this to continue?
Yes, if you look at Muthoot Finance, if you look at the entire financial space, that has done very well. And Muthoot Finance also, I think, is going to be outperforming from here on. We can clearly see that happening. And one can continue to hold on the positions here if you have, or you can create fresh positions here. And the target can be around the level of 3,800. On the downside, the support for Muthoot Finance is going to be around 3,470 levels.
All right. From Muthoot Finance, let's move on to GCPL that is doing not that great today. It is down almost 4% in the trading session on account of missed estimates of the results. The street is giving it a thumbs down. That's now down 5%. Let's take a look at the numbers. We do see the net profit that is up 9.7% at 452 crores. We were penciling in a profit of 597 crores. So on the back of that, we see the profit missing the estimates. We also have the margins that are down 3 basis points at 21.6%. EBITDA that is up 10.8% at 841 crores. We are penciling in an 853 crores of EBITDA. So it is a miss coming in on the EBITDA front as well. And as far as the revenue is concerned, revenues are up 11% at 3,900. And on the back of weeks that coming in, or rather results that have missed what the street was penciling in for GCPL, that stock is down and out 5% in the trading session. But coming to you, Rabinder, you picked out Bharat Forge for us, another earnings candidate. Tell us, what does the report card look like?
Well, yes, Bharat Forge is up around 4.5% after reporting a very good set of number in Q4 FY26, where in Q4 FY26 company revenue grew by 17.5% on a yearly basis at rupees 4,528 crore, and company's profit has slightly declined to 17% on a yearly basis, and margin has expanded from EBITDA has expanded from 681 crore to 778 crore, and management commentary remain very positive that management said that they are optimistic of achieving 25% revenue growth with a commensurate increase in EBITDA and profitability for the Indian manufacturing operation, which is driven by execution of order across business and the recovery in the market. So back of this the strong set of number and positive management commentary, Bharat Forge is in focus and the stock is up more than 4.5%.
All right, that's Bharat Forge. Let's move on from Bharat Forge to GAIL. Ashish, a counter that has been doing well in the last few weeks. It has picked up 15%. Tell us, what are the levels you're watching out for?
See, if you look at the overall performance, the Bharat Forge has done very well, but I think there is a lot of potential from here on, and we can expect the overall mid-cap index to continue to outperform mid-cap, large-cap both. And Bharat Forge can move towards the level of around 2,100 on the upside. There is some minor profit booking from the higher levels today, but I think that breakout is very genuine. Along with good volumes, and we can expect 2,100 on the upside. On the downside, one can maintain a stop loss for the stock, which is around 1,900 levels.
Yes, Ashish, but we were talking about GAIL. It's a stock that you've picked out for us. So tell us the levels for GAIL.
Okay, I thought it's Bharat Forge, but Bharat Forge is looking extremely well. GAIL is consolidated, and the stock is on the verge of a very strong breakout. So 168 is the level where GAIL is consolidating, and I think it's going to give a breakout. It's yet to do that, but once 168 is taken out, we can expect the stock to move towards the level of around 175 or higher levels. On the downside, the support for the stock is around 164.70 levels.
All right, let's move on from GAIL to another stock that is trading on the account of its Q4 results is Shree Cement. That's up 4%. Inline set is what is coming in, but the management commentary seems rather positive. Let's take a look at the numbers first. We do see a profit jump. The profit that was down 8%, 8.5%, but it has come in at less than what we were penciling in as far as the revenue is concerned. That is seeing an uptick of 10%, at 6,100 crores. The EBITDA is down 3.1% at 1,384 crores, and also we saw the EBITDA margin that is at 22.7%, but it's a management outlook that seems positive. The management says that the cement industry remains rather well positioned to benefit from the healthy demand growth in the medium term. The geopolitical conflict in West Asia and the forecast to moderate monsoons conditions may act as a headwind, and the impact on the growth momentum can be very short-lived, but they are positive on the larger picture and the outlook going ahead. And in the back of that, Shree Cement is up in a way 2.7%. But coming to you, Ashish, you picked out CG Power. Tell us what's on the chart.
See, overall, if you look at the entire power space and the power index, the energy index, I would say, that has been the top outperformer over the past 3 months of time, 2 months of time. We can clearly see that outperformance coming in. And CG Power actually gave a very clear breakout from a flat pattern, and that continuation, it's usually a continuation pattern. We can expect that target to be around the levels of 920 on the upside, and on the downside, one can maintain a stop loss for the stock at around 830 levels.
All right, so that was the last talk of the day. Ashish and Ravinder, thank you so much for taking the time out and joining us and giving us all your picks. But let's